Trade less. Money cannot be made consistently by trading every day of the year. One cannot be successful by speculating every day or every week. There are only a few times a year, possibly 4 or 5, when you should allow yourself to make any commitment at all. Meanwhile, you are letting the market shape itself for the next big move. When you are doing nothing, those who feel they must trade day in and day out are laying the foundation for your next venture. You will reap benefits from their mistakes. Keep a cash reserve so that when all the factors are right, you can move in with great conviction. It is dangerous to spread out all over the market. Do not buy too many stocks at one time. You will become entangled and confused. It is much easier to watch a few than many. This will keep your trading universe small and controllable. Confine your studies to the prominent stocks of the day. Choose the most powerful stock in the group, not the best bargain or beaten down stock poised to recover. If you cannot make money out of the leading stocks, you are not going to make money out of the stock market as a whole. The big money is made by sitting and waiting. Wait until all the factors are in your favor before entering a trade. Once a position is taken, the next task is to be patient and wait for the move to play out. Normal price action. At the beginning move, there's a very large volume with gradually advancing prices for a few days. Then a normal pullback with less volume than on days of price advances. Do not be afraid of this normal pullback. In a day or two, the price will be selling into new high territory with increasing volume. Sooner or later, another normal pullback will occur. New highs are great news because it meant that the stock had pushed through overhead resistance and is very likely to advance. When a stock breaks out to a new high on heavy volume, it is likely that there are no more overhanging resistance to stop the progress of the stock for a while. Thus, it is usually safe to buy the minute a stock touches a brand new high. However, after a long-term move, heavy volume is usually pure distribution as the stock goes from strong hands to weak hands. Checklist. Before making any trades, make sure the market, the industry group, and the sister stock is also aligned in the same direction. Stocks do not move alone. When they moved in groups. The exception is that if a stock makes up over 50% of the group, then sooner or later the rest of the group will follow. Track 2 stocks in the same group because they always move together. It is a great way to confirm the move. Make sure that you have placed as many factors in your favor as possible and never rush into a trade. Take your time, there will always be another play. Wait for the pivotal point, a change in the basic market direction. It is usually accompanied by a heavy increase in volume, a climax of buying, which is met with a barrage of selling or vice versa. Being a little late is insurance that you are right or wrong. Stick to the strongest industries and the strongest stocks in those groups. The most difficult part of trading is when there's a change in the trend. First, do not be invested in the market all the time. Be in cash, especially when you are unsure of the direction of the market and waiting for confirmation of the next move. If you think that a trend reversal is coming, but isn't sure when or how severe, you should simply cash in all your positions and wait. Second, to determine if you are right that a trend reversal is coming, simply buy small positions to test if your judgment is correct. The market always precedes the economic news, it does not react to economic news. Never predict or anticipate the market. Only try to react to what the market is telling you by its behavior. Buying. When an uptrend is in progress, buy as soon as a stock makes a new high on its movement, after having a normal reaction. Do not chase a stock if it gets away from you. Let it go. If you buy more than 5% or 10% above the pivotal point, then you may be late. It is wrong and dangerous to buy a stock all at the same price. If you want to buy 3 shares, start by buying 1 share. If it advances, buy the second share. If it advances again, buy the third share. The reason for this is that your trades have at all times shown you a profit. The fact that each trade showed a profit is proof that your judgment is correct in the trade. As long as a stock is acting right, and the market is right, do not be in a rush to sell. If you have timed the movement correctly, it will show you a profit at the start. From then on, all that is required of you is to watch for the appearance of the danger signal to tell you to step aside. Selling. Always look for danger signals or aberration in the stock or market. Any price spike, high or low volume would qualify. An example is a bearish engulfing bar with heavy volume or one-day reversal. This often happens at the end of a long-term move. Have the courage to heed the danger signal and consider selling at least a portion of the stock. If everything looks all right a few days later, you can always go back in again. This will save a lot of worry and money. You should have 2 stops in mind when entering a trade, a price stop and a time stop. In the beginning of a trade, watch the stock as closely as possible. If it did not move within a few days or maybe a week or so, sell out the position, even if it did not decline. Waste no time in closing out an inconclusive stock and moving on to another trading situation. Hold losses to a minimum and await for a more favorable opportunity to re-enter the market. Never average losses. It is foolhardy to make a second trade if your first trade shows you a loss. Emotional discipline. Keep stress at bay by keeping the mind clear and judgment correct. This can be achieved by going to bed early, eating and drinking lightly, taking exercise, and speaking to no one about stock market actions. A good trader is like an athlete who must keep the physical side of their life in perfect form. People feel the desire to go out at night during the week for social interactions and recreation, but it is a dangerous practice on a regular basis if they want to be successful in the stock market. Plan each day in the morning when there is silence and the mind is fresh. You must have a clear, concise strategy and stick to it. You must design a plan that suits your own emotions. Each time you lose, try to learn why. Be poised in handling your hopes and fears in a calm manner. Be patient to wait for the right time to enter a trade where all the factors are in your favor. Be silent by keeping your victories and failures to yourself.